Welcome to the Three Questions webcast series. I'm Wayne Baxter, Senior Executive Manager with One Capital Management. On this edition of the webcast, we're going to speak to a professional sales tax expert and ask the three questions Canadian business who sell products in the U.S. should ask about sales tax. Thank you for taking time to check us out. And if you enjoy this episode of the Three Questions webcast series, please consider liking this video and subscribing to our YouTube channel. My clients are often referred to as cross-border clients. Now, why would that be? Well, it's because they're either U.S. or Canadian residents who invest in U.S. and or Canadian dollar denominated securities like stocks, bonds, and ETFs. At One Capital Management, we develop and implement strategies that strive for our clients to grow, protect, and ultimately distribute their wealth, and we do that by offering investment wealth management services. Our process for advising our clients includes an in-depth discovery and diagnostic analysis of their wealth management goals and objectives. And for some of our clients, their focus may be on building their business in order to create wealth. In addition to thinking about their wealth management goals, they're going to be focusing on developing a strategy for building their business. On this edition of the webcast, we're going to talk about cross-border tax planning through the lens of a U.S.-based sales tax specialist. On this edition of the webcast, we'll be asking the three questions Canadian businesses who sell products in the U.S. should ask about sales tax. Joining me from Pasadena, California is Dena Oberst. Dena is the president and CEO of Gable Tax Consulting Group, Inc. Gable Tax Consulting Group serves CFOs, controllers, and tax directors by ensuring their sales and use of taxes are correctly and on dime as to avoid disruption of cash flow. Dena, great to see you. Thank you for making time to join us today.
Thank you for having me on your webcast.
Yay, we finally got around to this. It's been a long time in making this happen, and I really appreciate you making time for me. You know what I thought? Maybe before we get to our questions, just to help clarify what it is that Gable Tax does, maybe you could just take a couple minutes to talk about the expertise and services Gable Tax Consulting Group provides. And I think it will just provide maybe a little bit of clarity for the folks listening in today or watching today.
Absolutely. Well, for over 30 years, we have been providing clients multi-state sales and use tax services. And what we do is we actually help clients become more profitable by proper sales tax compliance. So what does that mean? Well, it means that we come in and look at their business processes to determine whether or not they have a sales tax filing responsibility. We will help advise them on their products, if they're taxable or exempt. We help them set up their billing systems. We get them registered with all the jurisdictions, and we file their monthly sales tax returns. Yes, monthly. Unlike income tax, which is annual, sales tax is a monthly process. And of course, we provide other sales tax consulting services like audit defense and tax research.
Well, given the importance of your role, I think it's easy to see how your clients would probably view you as an extension of their overall team. So today, we're actually going to focus on Canadian business owners. We'll probably do a webcast down the road on US-based ones, but we're going to talk about Canada today. And as we know, and as you've helped educate me, there are several ways Canadian businesses sell products into the US market. So before we get to our three questions, maybe you could just spend a little bit of time explaining how Canadian businesses can sell products in the US market.
Well, a lot of people want to sell in the US. It's one of the biggest markets in the world. And the sales tax filing requirements got really confusing back in 2018. Prior to that, I feel like a lot of international-based companies did not have to file in the US for sales tax. And so in light of the Wayfair case that happened in 2018, it's kind of pushed sales tax outside the borders of the US and impacts all international businesses, including our Canadian border partner. And so with that, the types of activities that they have in the US matter. So historically, if you were just a complete remote company, you had no people in the States, you had no inventory, like nothing of physical nature, and you just provided sales across the border. You shipped goods or products or provided services remotely, right? 100% remote. You didn't have a filing responsibility. That's what we call remote seller. Well, in today's world, we have what we call economic nexus, which now requires Canadian businesses to determine what kind of activities they have in the US and whether or not they have to collect sales tax. By the way, Canada has a very similar economic nexus. It's kind of like toe to toe, like, okay, US, you're going to make our Canadian businesses comply. We're going to do the same for you. So actually, we do a nexus study, or I'm not going to use the word nexus because I know in Canada it means a different word.
Yes.
But we do a sales tax analysis for businesses in both US and Canada to make sure that they're complying with the various laws. And we can talk a little bit more when you get into your 3 questions about the different activities that trigger that responsibility. But I think for today, the biggest and most important thing is Canadian businesses are like, we're remote, Dena. What do we do?
Right. Okay, well, now that you've provided a little bit of more clarity for us here, why don't we just take a look at the 3 questions? And again, these are the 3 questions Canadian businesses who sell products in the US should be asking about sales tax. And question number 1, again, these are from the point of view of the Canadian business owner. Question 1, do I have to collect US sales tax? To me, I thought, well, that's a no-brainer, but please explain.
You're going to hate the answer, but it depends.
I knew it was coming.
Right? The famous, oh, you must be a consultant.
Every LA attorney we've ever met answers every question you've ever asked them. Well, so you are, well, you're in good company.
Well, and I think it adds a little confusion because, as you know, being a Canadian yourself, the GST and all the others, HST, they're very well defined, right? And so you have mostly taxables, kind of like a gross receipts tax, and then you have some zero-rated items, I'll call them, right? Or input tax credits. So unlike Canada and the US, we don't have such a thing. We have exemptions either at the product level or at the customer level. And so it gets really confusing. So the first thing you have to identify if you're a Canadian business is, what are you selling? Are you selling a tangible product? Are you selling goods? Are you selling software? Software as a service is a great one because it's subject to tax in only a handful of states. Let's say half of the US states, right? There's nothing tangible with software as a service. Clothing has a lot of exemptions in various states, and sometimes it has a special tax rate. So the first thing we do is you have to figure out what you are selling and is it taxable in the US, right? If you're doing like IT management services, it may not be subject to tax. So the first thing is, what are you selling? The second piece of it is, who are you selling to? Are you an end consumer? If you're selling goods like clothing, are you selling to the end consumer? A typical e-commerce, or are you selling to other businesses that are going to resell your product? Because if you're selling to a business that's going to resell your product, they're going to want to buy tax-free. So you're going to need to understand before you get all excited about sales tax that maybe you don't have a sales tax responsibility because the customers you sell to aren't subject to tax. So as you can see, it gets very complicated for a Canadian business. The third, and not the final piece, but the third piece, do I have to collect sales tax? And the answer was depends. The third piece is depends on how much revenue you generate. So we talked about nexus. The word nexus in the US is your connection to the state. So it's the Canadian businesses connection and business activities in the state that determine whether or not they have a sales tax responsibility. So as I mentioned a few minutes ago, there was a 2018 court case, Supreme Court case that was heard that overturned a previous case that protected out-of-state and out-of-country businesses from the burden of collecting sales tax. Now that case has happened in June of 2018, we're way many years away from that now. That's where the economic nexus term comes in. How much revenue? Do they sell 200 coffee mugs in a state? That could give them sales tax collection responsibility. Do they sell 100,000 of revenue in a given state? That could give them sales tax. Now, problem is, Wayne, is it varies by state. And I'm just going to use New York as an example because there's a lot of commerce between Canada and New York. It's close.
For sure, yeah.
A big commerce state for even the US businesses. At least New York has a $500,000 threshold. So unless they're a little bit smarter. So there's a few of these big states that at least, kind of raise the limit. And so they're not really at the 100,000. And actually, I think Canada is like 30,000 Canadian dollars a quarter is what trips their economic nexus. So do I have to collect US sales tax? It depends.
Understood. So one of the things I kind of picked up on was the difference between selling wholesale and retail.
Yes.
That's one thing I did catch. And then obviously, again, depending on what state you're selling into, and each of them have their own potential thresholds or floors. And if you are below that. So I guess one question I would ask, and I may be overthinking it, which shoot me for that one, but do businesses ever strategically locate themselves in a way to, or sell in such a way to avoid?
It's a great question. Yes. I would say historically, yes. And this is exactly why South Dakota went after a retailer called Wayfair, right? They're a big retailer, and they weren't the only ones that was in the lawsuit. But that's exactly what South Dakota said. Said, well, you have significant revenue generating activities in our state, but you have no physical presence or any of these others. Because again, strategic, right? They don't want to have payroll there. They don't want to have to collect it. And that's kind of what forced the Supreme Court to get involved, because there was a lot of protection. I'll just use Amazon as a great example. Okay. Amazon, you have seen morph because of this. So, right, in Amazon back in the day, they were very just in the state of Washington. They didn't have their own trucks. When did you start seeing trucks on the ground? That is all sales tax related, because prior to the Wayfair decision that we talk about the Wayfair, and prior to the economic nexus laws, if they didn't have physical presence in the state through various activities, we'll talk about those, then they didn't have to collect the tax. So yes, strategically, Amazon back in the day made sure that they didn't have to collect anything other than the Washington state tax. Fast forward, there's been a lot of tax law changes for sales tax in the last 5 or 6 years. Now they have the responsibility to collect the tax. So now you see them everywhere, because they're not avoiding, I wouldn't say avoiding, but trying not to have the complex filing responsibility that comes with sales tax compliance.
Well, you did such a great job with question number 1, and I'm going to move now on to question number 2, which is, what activities create sales tax exposure? So what activities create sales tax exposure?
Right. So we're going to move away from the economic nexus, the remote seller, right? The $100,000.
Again, referring to the Canadian business owner,
yes,
looking to sell into the U.S. What activities do they have that will create a taxable event, I guess we'll call it?
Right. So, but I'm saying outside of the Canadian business having those types of revenues, that measurement, that threshold that you talked about, which we call economic nexus, only is if you are 100% remote. And a lot of times I work with a lot of Canadian clients and they're like, Dena, we're remote. And then I started asking questions. Well, do you have a third-party logistics in the country? Well, yeah, of course, it's in Ohio, but we don't own it. It's not ours. I'm like, but you have inventory there. Do you go to trade shows? Yeah, but we're only there 3 days a year. What activities do you do at the trade shows? Are you attending? Do you have a booth? Are you taking orders? Are you soliciting? How many days a year? So each state has different rules on how much activity you can have before you have a sales tax responsibility. Some of the other things I get from Canadian businesses are, well, this was the managed IT example. We do managed IT services. Okay. You never visit the client? Well, sometimes we may come. Well, that sometimes you may come gives you physical presence, even if it's temporary. You're not soliciting because you're with an existing client.
Is there a minimum time frame? Like, so in other words, in and out in 1 day, does that still apply, or do they have to say for an extended period of time?
That's a great question. The only one that has the limit is the trade show activity, and based on what activity you have at the trade show. The rest of it, I always like to tell people, If your big toe landed in the state, you're using state resources. You're using the roads, the electricity, and all of that. And therefore, the state wants you to be responsible to collect tax. So let's talk about those activities, because if you have these types of activities, you will be responsible for collecting the tax. Let's be very careful about the words, collecting it. You're not paying it.
Mm-hmm.
So I get a Canadian, clients that are like, but I'm paying tax. Well, it's not the same as like GST. You are collecting it from your customer.
For the benefit of the U.S. government.
And then you're paying
and the
that
states.
money.
Yeah,
the state. You're taking the money, you're holding it in trust, and you're paying it to the state.
So you're a tax collector, even though you're not you're a non-U.S. entity, even though you're in Canada.
I love that, Wayne. I'm going to use that. You're a tax collector, because I think if the Canadian businesses, if I can use some terms that are better for the Canadian business owners, you become the tax collector. Because in the U.S., sales tax is a transaction tax, which means that the person that is buying,
it's a consumption tax, essentially.
Exactly. So if I buy coffee mugs for my team, I have to pay sales tax in California. But if I bought them from a Canadian company and they shipped them to me here in Pasadena, there isn't any sales tax. I am supposed to, this is the law, I am supposed to self-remit sales tax, which we call consumer's use tax, on the merchandise that I bought tax-free. And if I don't have a sales tax permit, I'm supposed to put it on my California income tax return. So sales tax is really always due on the transaction. It's just who is legally and financially responsible for collecting it. And the last thing a Canadian business wants is to find out that they were legally required to collect it and they didn't. Because if they didn't and they're audited, that money comes out of their pocket. And that's not how we want to do business.
Yeah.
It's a pass-through tax.
All right. Well, that's excellent. Now we know the activity. So the third question a Canadian business should ask before they start selling, if they're selling products into the U.S. And again, the idea here is, one of my favorite lines is ignorance is bliss and the mother of adventure. So let's try to avoid that. Let's educate and inform here. So the third question is this: are my U.S. customers exempt from U.S. sales tax? I cannot wait to hear the answer to this one.
You want to guess? Starts with a D.
Yeah, it depends.
It depends. It depends.
I'm a fairly quick study at certain times during the day here, so.
Oh, Wayne, I know you're brilliant. I mean, you're doing those webcasts. You'd say, get out, come on. I applaud you. So it really depends. As I mentioned earlier, let's take that Canadian company that sells to a wholesaler, and maybe they're drop shipping product, right? They're selling to another big box retailer or wholesaler that's then turning around and selling their product. So Canadian business is just a supplier of goods. Well, if they have the responsibility to collect tax, the last thing they want to do is they want to get registered in the US to do business, only to find out that the customer that they sell to is exempt from tax. And on the surface, they may say, and I get this a lot, they're like, but Dena, I sell to the government. And I'm like, the federal government? The state government? Like, who do you sell to? Because the federal government may be exempt from sales tax, but the state government is not in some states. Like in California, we like to tax our own state government.
Oh.
Yeah, surprise.
Why am I not surprised?
So the problem is that we talked about the first thing. Do I have to collect sales tax? If the answer is yes, and what activities, right? We realize you have activities that require you to legally collect tax. The third thing is, okay, my customer complained to me and says, I'm exempt. I am not, do not charge me tax. So the Canadian business says, okay, I'm not going to charge you tax. Well, then I come in and say, well, what proof do you have? It's like, well, they told me. I'm like, nope. You need a document. You need a resale certificate or an exemption certificate from your buyer that says who they are, what are they buying from you, and why are they exempt. And unfortunately, historically, you could accept it as good faith. You're not a tax person. You're a manufacturer and you're shipping
Right.
product. States no longer accept the ignorance of I accepted it on face value. It has to be verified and validated.
So where does the U.S. business conjure up this document they're supposed to share with the Canadian business owner?
So it's actually a form. So a lot of times what I do is I tell these Canadian businesses at the time of the transaction to ask the customer if they plan on issuing some kind of exempt documentation. There is a multi-state, multi-jurisdictional exemption certificate form. It's a form. It's not something that comes from the state that the customer fills out, and then the customer puts their permit on it. So let's just do the transaction. I'm the buyer, Gable Tax Group, and I want to buy tax-free. So I would give the Canadian business, guy with the cup, right? The coffee cup guy, my resale certificate number on this form that says I'm going to buy tax-free because I'm going to resell these to my staff. Let's say, I don't know, I'm going to sell these goods to my staff.
Well, I think the most important thing here I've learned here is that, you know, there's some responsibility at the Canadian vendor end. You know,
there is a lot of responsibility.
If we've done anything today, if we have a Canadian business owner who's hopefully listening to our webcast and they listen to what you just shared, you just may have provided them with some clarity. And because, you know, again, you know, we assume everybody knows everything. You know, it's the biggest mistake we make. I think we've talked about that. I know, you know, assuming is the one of the biggest mistakes you can make, as we all know. So I wouldn't be surprised if there were a few eyebrows raised today that in terms of accountability on that point. So no, I just can't take their word. I actually need to get an actual document that verifies that that they're exempt from sales tax. Interesting.
Which kind of stinks, right? Because when you're a business owner and you're running a company, it's all about sales, right? And so the customer is in the US, they must know it's their country, it's their state, right? So as a Canadian business, you really rely a lot on your customer knowing what it is. But the problem is, who's responsible? And if it's you, the Canadian company, I don't want you paying out of pocket because you didn't ask the right questions, like of a sales tax person like myself, to make sure that you're protected. Because the whole reason for having someone like a sales tax specialist that you can call is to protect yourself, to protect your business, to protect your profit, so that you don't make the mistake and get the wrong document. And then 3 years later, when you're audited, whammy, you're stuck with a liability that really wasn't yours.
I have one question, but I've actually thought of a second question. I know we've gone through our official 3 questions here, but as I knew would happen, and I think I may have warned you that this could happen, I knew that your responses would conjure up responses from me.
Sure.
But okay, I have a couple follow-ups. So one is, okay, I'm more curious, and I probably should have asked you this before, but I'm going to ask you on the spot here. Is this sort of I don't want to call it negligence, but these omissions, how frequently are you having to overcome them? Is this something that is like a one-off, 1 in 1,000, or is this more frequently than you would imagine?
More frequent that an out-of-country business is stuck with the liabilities?
Yes, that they're not getting the proper checks and balances and find themselves being subject to having to pay sales tax that they should have been collecting.
Yeah, it's a great question. Because this economic nexus law came in the middle of 2018, we're kind of just starting to see the ramifications for non-compliance. Because, right, so each state has their statute of limitations as to when they can audit if you're a registered taxpayer. If you've never registered, there is no statute of limitations. So it goes back to the beginning of time. So the states are so busy right now, Wayne, in trying to audit those that registered since 2018, 2019, really 2020, let's say, because it's 24 already, 2020. Anybody that registered in 2020, they're auditing. Particularly Illinois is auditing. Because why? Because they know they probably should have been collecting starting in 2018 when they changed the tax law and didn't. So if the Canadian business has no physical presence in the US, it's going to be very difficult for an auditor to, one, know who they are.
Right.
and two, come after them. So we haven't seen too many cases yet where these out of countries have been audited. I have a lot of international businesses. The difference is between these international businesses and domestic is the international businesses actually want to do it right. They're kind of scared. I get kind of giggle a little bit when they go like, well, I want to make sure I can travel and I don't get stuck at the airport and I can't come back, So, I think these countries that have, GST and all these other VATs have a little more fear about not paying your taxes. So I would say my internationally based businesses are actually really trying hard to comply because they want to do business here.
Right.
And so it's time will tell. We'll have to do another episode in 2 more years
Yeah,
when the audits start flying.
great minds think alike here. Okay, I have one more before I let you go here, but I guess this would be probably a chance for you to kind of provide some further direction. What advice would you have for a Canadian business owner who is looking to sell their products into the U.S.? Again, from the lens of the context that we've been talking about here, from a sales tax perspective, what at a high level would you say? What advice would you give them?
So my advice, and again, this is really coming from a self perspective because I run Gable Tax Group, and what we do is we actually provide free complimentary sales tax nexus analysis for business owners. And the reason why we do that is because I want to help educate, right? So a lot of my colleagues charge thousands of dollars for this analysis, but it's complimentary. And that, I hope, encourages the Canadian businesses to reach out and say, would you do a free analysis for me? Give me a health checkup, Dena. Help me sleep at night. Do I have a no problem? Do I have a big problem? Do I have a little problem? What do I need to do to comply? Because based off of that analysis that we do, we come back and we meet with the business and we come up with a plan. And I give them a risk factor, right? So every business has their own level of risk. So $1,000 is a big deal to some people, others it's not. So we do a cost benefit analysis to come clean, to not do anything, to wait and see. So I would just say if you're selling products or even software into the country, you definitely at this point, because we're in 2024, should do a nexus analysis or sales tax exposure analysis. Let me use some easier words for the Canadians to get a good health check because the audits are starting. The states are finding who these people are that aren't complying, and it's not going to be good because you're not going to have the opportunity to collect the tax from your customer, depending on your business model. And the other thing I will just say quickly, because I didn't mention it, and this is really important to know. A lot of businesses outside the country will say, we sell on Amazon, Amazon takes care of it, but we want to launch our own website and start selling in the US because obviously the margins are better when you don't have a third party.
Yeah.
And they say, but Dena, I have no payroll, nothing in the US. So until I have 100,000, I guess I don't need you. And I'm like, that's not the case. Your Amazon presence, that revenue generated on Amazon could count towards your economic nexus threshold. And two, if they're selling through Amazon FBA, which most people do, because that's the benefit, the fulfillment by Amazon, it means that Canadian company actually has inventory all over the place. So what does that mean? They're like, but Dena, Amazon collects and remits. It still doesn't protect you. It actually taints all of the sales that you have on your own website, even if they're minor, even if you have $10,000 of revenue on your website. So what we do is we break it down so they gain an understanding. I'm not telling a Canadian business to register for sales tax at 10,000. I'm not, but I think it's good for them to know what activities trigger them and also put them in front of the taxing authorities. Because prior to this economic nexus law in 2018, Amazon was actually turning over seller lists to the states through court order. So they share information. So it's just good to get a good checkup.
You know what? I could keep you on here for another half hour and batter you with questions, but that would be totally unfair. So I will say this, and I hope that those who are listening in who have these types of questions, they do reach out to you. And with that in mind, for those who are listening and do want to reach out to you, what is the best way for them to get a hold of you, to reach you? Is it a phone, email, website? What would you recommend?
I mean, the best way, because it's probably the easiest for them, is to go to our website, gabletaxgroup.com. You'll see my picture on there. You will see a little link that says schedule a call with me. That link takes you right to my calendar, and you can pop in what you want to talk about. You're on my calendar. We do a Zoom call or Teams, depends. I mean, sometimes the Canadians would rather do Teams, and we will meet and talk about your questions. We do not charge by the hour. We do not charge for phone calls. It's completely complimentary. We are here to help educate. And of course, if you have a responsibility, we hope you hire us. But I'm really here to help educate the world. You know, sales tax has gotten really complicated since 2018. And people like myself sit in the big 4 accounting firms and the huge firms. That's where I came from. So there's not a whole lot of us here to help the other business owners that don't work or don't, hire through a big CPA firm. They're expensive. So yeah, I would strongly suggest just to go to the website. It's the easiest way to get on my calendar.
We've actually put all of that underneath you on the screen. The folks that are watching, they'll be able to see your contact information and be able to.
Or they can call me directly. That 888 number goes right to me. And just so you know, just so your audience knows, I'm not a team of 1. I'm actually a team of 23. There are 23 multi-state sales tax gurus that love this stuff. And so, yeah, you may start with me, but I have a whole team to support you. So don't worry. We're not as small as it may appear.
Well, Dena from Pasadena, we did it. We got through our first one. Yay. And we're so happy to took the time to join us today. Dena Oberst is the president and CEO of Gable Tax Consulting Group, Incorporated. She joined us from Pasadena, California. And I cannot thank you enough, Dena, for making time for me today. Great job. I'm looking forward to having you back. No doubt, no question, again, for another educational and informative segment.
Well, thanks for having me, talking about my favorite topic. So hope I can help someone out there. Thank you very much.
Thanks so much, Dena. Take care. I look forward to bringing you the 3 Questions webcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our YouTube channel. And to receive notification when our latest webcasts have been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we'll see you soon.